All right, I'm going to be going over some markets. Basically, I'm going to start focusing on fewer markets and just really concentrating on them, um, based on the markets that I want to trade. So, basically, try to focus more on the crude and the YM, as well as maybe some stocks or some other contracts, as needed. So over here, what I'm looking at is a 2,000 tick chart. As you can see, we were in a market was in a downtrend, and then you have this 140 in a downtrend that started. This was the first change of behavior right here. This here was the lack of demand. So you got 120 down, up 24. That's the lack of demand. That's the breaking of the ice. That's the test. That's where you get short, on the retest of the low volume, because there's no demand up here. So the ability for the market to get above demand is where it's already proven that there is no demand. It's going to be difficult. In any case, you have the components of a turning point, and that leads to a downtrend. After that, you have 140 up. 140 up in this downtrend is a change of behavior. But high volume really doesn't mean much without a low volume pullback. In this case, what we see is 140, 107, and then 81. Yeah, that is meaningful. This is enough for me to say that there's something going on, and very likely it could be short covering, or it could be a temporary trend change, or it could be a retest higher to test around this breakdown here. So what you have is 140 up, 51 down, 107, and then 81. And then you have this phenomenon of how markets like to test. Typically, they don't really go all the way down to support. Many times, markets will not go to the edge of support because, or go below support, below this bar, because that's what the breakout buyers or the breakdown buyers will enter. So what markets do like to do a lot more than springs is test the low and the high bar. That's where they've caught everything in the middle, and they can hold trend. The markets, they can go all the way down to the low bar and then continue upwards, and they'll still be holding trend. The trend is not broken because the low bar is intact. Typically, very rarely do you have springs. And springs of all the way down is dangerous for whoever's trying to push the market higher, because selling pressure will come in and it'll break their accumulation. In this case, what you have is 140 up, etc., 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 and then eventually it goes up to this area here on 157 volume. Okay, so this is one intraday trend on the 2000 tick chart. How do you know how to buy or how to get long? Well, first thing is, you take a look at the 140 volume, you know that there's buying because of that wave. So demand has entered, and it entered again, and it entered again. You have 1, 2, 3 higher highs. Now the question is how to get in. Problem here is that there's no low volume pullback. So you don't know if the trend's going to continue downwards. And in these cases, very likely it can hit the low bar. Okay, so you can buy the low bar, like that's what I would be looking at, or you can wait for the low volume test, which occurs later. All right, when it hits the low volume test and then it comes out, you can buy some type of pullback. Right here, what you have is 25 and then 49 down. 49 down is unable to take out the 25, which makes 49 what? F for reward. Yeah, F for reward, and you have a nice buying on top of that. You can buy the pullback here. That's what I would do. You got a low volume test, F for reward, follow through, and buying the pullback here to get this piece. After that, we had was a bearish change of behavior, also known as sign of weakness. All right, and you'll notice that the sign of weakness is coming from 26, 24, 25. In other words, a lack of demand is what's creating the sign of weakness. This area with 26, 24, 25, this is evidence of a lack of demand. All right, lack of demand in this region, leading to selling, and the test of that lack of demand is, a good place to go short. If you go to the extreme, you don't get filled. You go 2 ticks below or whatever, you get filled. After that, you have follow through on heavy selling. All right, so that is pretty bearish. Okay, now you're probably looking at this 25 and then 100, but note that all this 25 is doing is setting up this 100 to test. After that 100, you have 156, and this is just sideways building of cause. All right, now if you know what cause is, it's a sideways trading range that is going to turn into expansion. Over here or here, somewhere here. So you have that energy building up that releases itself into a what? A huge thrust. Now, how do you know exactly where to go short? Look, the only place you can go short after this 127 is around here. Either you get filled or you don't. After that, I really don't see where you can get short here. Now the question is, what about this area after this significant breakdown, and where is the forecast? Where can it go? Get into all of that in a minute. First, I want to take a look at this trend and that trend on the figure charts. All right. So the trend that you saw, see what time it was. It's about 8 to 10 o'clock, and then, okay. All right, so what's going on here? That's about 8. That's your lack of supply. How you know it's lack of supply? You got the thrust here, right? The demand. So that's your lack of supply. Anyway, it's about 10 bars. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Didn't quite make it because there's weakness in the background. Right. Also, when there's weakness in the background, you understand that these moves, the going long in a downtrend, typically the counter trends, which in this case would be the long, will not really make it. All right. If anything, the counter trends they're fairly weaker, and that's why many times the counter trends don't make it. Now, what about the latest down move here? We saw the breakdown. Well, the count is from here. It's about 13 bars. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. All right, this is a little hard for me. I can't really count. It's about 1, 2, 3, 4, 5. It's about 13. So it would be from 5, 10, 11, 12, 13. So that's the current projection, which is about, oh my God, it's about 38.84. I can't believe crude is that low. About 38, in this box here. So that's the current projection based off of that lack of demand followed by the initial sign of weakness. So you got the sign of weakness to the LPSY which is right here, and that projects here. Now there'll be more stepping stone counts as well, so this may just be an initial count. I don't know, but that's the count. So that's all. In my next video, I'll go over the YM